Hey, this is Justin with DayTradeTheMarkets.com on June 4th, Monday, 2012. Hope you had a nice weekend. In this video, I wanted to take a look at the ES and show you an example of what we call a continuation type of a trade, and then also show you some evidence that buyers were coming in off of the low to help you maybe stay out of the way of continuing to get short and maybe even get long if you were more aggressive. Typically, we talk about the idea of confluence trading, where you're waiting for various pieces of evidence to line up. And a lot of times, you'll see in some of our other examples, we're usually talking about, selling near a red zone in here, or buying near a green zone type of a thing. But that's not all you can do. Obviously, we also talk extensively in our course and in our daily member videos about a concept that we call direction and then location, where our focus is to first try to use the both bigger picture and the short-term software clues that you're given to get a good handle on the likely direction of the market. Once you have a good handle on the likely direction, then you hone in on good trade location. And so we've got various trade setup type ideas. Like we have some vertical or trend following type of moves. We have some reversal type setups. We have some fade type setups, and they're all based on first being able to, and this is something that we really extensively try to teach, that it's all about being able to put the market into context. So wanted to show you an example of that, because as you can see here in the first half of the day, we had a pretty nice sell-off, but there weren't any zones to buy or sell against. So what do? One thing is you just wait around till you see a zone, and then you wait to sell or buy the green and red. But most people still want to be able to take advantage of a nice 15-point move and catch some, take some of the meat off of that bone, so to speak. So again, with context, we obviously sold off pretty hard Friday and into today on that employment news, and our bigger picture bias was down. So all things equal, we would rather be on the short side. Okay, so early on here, we opened and we decelerated there, but the first major structure is what we call this high velocity move. It's kind of that box in there, and that's telling us that there's some pretty strong selling that's coming into the market. And our first expectation is that the high of that high velocity move should act as some pretty good resistance. So that's kind of your first thought. It's what we call our retracement trade. So when that first comes in, you're thinking about, with this context being down, with our filter being strongly bearish, you're thinking about getting short somewhere in here. At least that's kind of what we talk about. Now, when we get immediate follow through, so in other words, as soon as this formed, we got a full bar below, several full bars below, and then the market just kept selling off. When that happens and the market's so weak, so to speak, that it doesn't even test the high of that high velocity move, and this is especially true when these are on the high or low of the day when they're formed, like this one was. So again, you've got the context of the market being in a down bias, strong red or strongly bearish filter, and then this structure that has a high velocity move that has immediate follow through. So at that point, we're thinking about what we call our continuation trade. Again, you're not going to want to do this in a down market taking a long, but since this is a down market and we have the filter with us, there's context there. So you're thinking, okay, I want the continuation trade, and that's looking to get short near the low of that box. And you can see we had a couple of opportunities here, half an hour later. Okay, so that's one way to take advantage of this sell-off here. Again, with the context of the bigger picture market being down, the filter being dark red, no zones yet in here, but still we're looking for a way to take advantage of this context and get some opportunity, so to speak. So again, similar opportunity here as well. We had another high velocity move on the low of the day at the time. You can see we had immediate follow through. So our first thought with this context is let's try to get short around the low of that box. Whether you caught it early when it decelerated right in here or waited in here, that's fine. You probably didn't get hurt. It wasn't didn't go 10 points or anything, but you probably didn't get hurt if you take that trade, and that's okay. But again, our thinking at that time is the bigger picture market's down, our filter's dark red. We're looking for ways to get short. That was certainly a good opportunity. You took a tick of heat, maybe. Didn't do great for you on the profit end of things, but you took no heat, no risk. Okay, so again, you're still thinking about getting short. However, the next part of what I want to talk about is some clues that we had off of the low of the day that some buying was actually coming into the market. Because obviously, if you're trying to get short in here, you got hurt. So, part of successful trading is trying not to get hurt, right? So, our first clue was that we had this level 2 or strong buying aggression, a wave of them right there. Okay, and so the first thing we're thinking about is we have this wave of strong buying. Does the low hold? Yes, it does. It held right in here. It decelerated. Then we had another high velocity move and a level 3 buying aggression bar as we busted out of that consolidation. Okay, so that's telling us at this point, even though our bigger picture bias is down, buyers are coming in pretty strong. You want to stay out of that way. Now, if you're aggressive, you hop on board this train, so to speak. But if you're not, and you still you like to be in concert with the bigger picture bias, it's at least telling you to stay out of the way. You're not going to get hurt. Okay, so and again, we had some more strong buying come in there, and so forth. So that's kind of the two things I wanted to hit today was just this idea of continuation type trade ideas with context, and then also staying out of the way when we're seeing that buying is starting to enter the market, or getting on board if you are more aggressive. So that's the free video for tonight. If you have any questions, let us know. Hopefully that made sense. If it didn't, certainly let us know. Let me know, and I'll try to clarify that. You can reach us at info@daytradethemarkets.com or at 919-443-2423. All right, look forward to speaking with you again soon. Thanks.